Google's finance chief Ruth Porat has announced that the company is making cuts to employee services, the latest in a string of efforts to trim the fat within the tech sector. The company said it's cutting back on fitness classes and the frequency of laptop replacement for employees. The cost-cutting measures come as Google goes through its most severe era of austerity in almost 2 decades. Google's employees can count themselves lucky that they're not victims of layoffs, which have claimed more than 300,000 jobs across the tech sector since the start of 2022. And that's according to industry tracker layoffs.fyi. A third of those were in January alone, with the pace of pink slips slowing since then. For more on this now, let's go to Han Tan, Chief Market Analyst at Xinity Group in Abu Dhabi. Thank you very much for being with us today. So some analysts say this is a redistribution rather than a sign of darker times ahead. What does it mean?
Right. So the idea for redistribution is that instead of spending money on some of the things you mentioned there, like laptops and fitness classes, those funds will be repurposed for other business units, such as improving its AI capabilities, for example. But generally, I would push back on that. Instead of redistribution, I would call it a healthy rebalancing, right? Because we know that the era of cheap and easy money that fueled the tech boom in recent decades, that's come to an end with the Fed rate hikes. The post-pandemic bumps have diminished. So overall spending is being dialed back, be it for R&D, for CAPEX, or even the job cuts at Google are intended to save the company some $3 to $4 billion US. So overall, again, I see this as a responsible return to fundamentals rather than redistribution, in my opinion.
Interesting, Han. And I mean, these tech companies, these mega caps, really continue to drive gains on the S&P 500 over the first quarter. That's despite the market turmoil. What do you expect for the rest of the year, given the monetary path of the Fed?
Yeah, so I think it's only appropriate if we start with what the monetary path looks like, at least in the market's eyes. So right now, markets are forecasting just one more 25 basis point hike at the FOMC meeting in May, right? And then in the second half of this year, or in the fourth quarter rather, markets are predicting 50 basis points in cuts by the Fed before 2023 is over. So in other words, the peak for US interest rates appear close at hand, at least according to market expectations. So that suggests that there's more room for tech stocks to recover. Although I must say that I am cautiously optimistic because obviously there's bound to be further twists and turns in the Fed's ongoing battle against inflation.
Right, so potentially one more rate hike ahead. Han Tan, thank you very much.
Thanks for having me.
And now let's go to other top stories from around the world. Virgin Orbit has filed bankruptcy protection in the US after failing to secure new investments to shore up its finances. The company came under pressure following its failed attempt to launch the first ever satellite mission from UK soil in January. Last week, Virgin Orbit said it's laying off 85% of its staff and ceasing all operations for the foreseeable future. Dogecoin's value has surged by around 30%. That's after Twitter CEO Elon Musk replaced the iconic bluebird logo with the Shiba Inu image associated with a digital currency. The change is thought to be temporary, and it appeared only for some Twitter users. Last June, the world's richest person was sued for $258 billion by a Dogecoin investor for manipulating the price of the cryptocurrency. And L'Oreal has agreed to buy Australian upscale cosmetics group Aesop from its Brazilian owner for $2.5 billion. The deal marks the largest acquisition ever for the French company as it aims to expand its presence in the luxury cosmetics market. Aesop operates almost 400 stores and generated $537 million in revenue in 2022. And that is all for business for now.